Well, welcome again to Friday Insights. This is Robert Schein, Managing Director and partner of Blanke Schein Wealth Management. Well, today is Friday, the 12th of June, 2020. Thank you for listening and watching. Today is an audio broadcast, if you will, so it'll be audio only. But we believe information is power, and our goal is to provide our clients, friends, and family with real time and relevant market related information. Our process creates smart and purposeful financial decisions that improve your life, your family's life, and your community that you care about. So let's get into it. We've got three topics today, and thanks for listening. Our topics are, today's trading session. Number one is the bulls and bears are fighting. We gapped up and the S&P 500 jumped significantly today, as so did the Dow Jones Industrial Average. So S&P and Dow and NASDAQ all jumped, I think, quite significantly, 2 to 3% in the market open, and all throughout the day going from 800 points up to all the way down to selling off into negative territory. And as I record this broadcast, we still have a couple more hours in the trading day. So we will find out who's ultimately going to win today. We are seeing some technical patterns that are forming. So we're going to see some testing. So keep in mind this last week, week and a half, or at least 50 trading days, which is the most significant 50 trading days that we've seen in market history in terms of such a positive move to the upside in such a quick, short fashion. So it actually set a record, the best 50-day move in the market history to the upside. That being said, it's not uncommon for when markets run so quickly, so swiftly, to take a breather. So we had a 7% decline yesterday. We could see an additional 3% today, or maybe Friday or Tuesday, to sort of see a technical pullback, which testing some resistance on the S&P just below the 3,000 mark. So we should see 2,900 tested. And if it really comes to it, 2,750 on the S&P is actually the thing that we want to pay close attention to from a technical level. But for us to sort of consolidate in here after having such a huge run up in the market and pulling back by 10% and sort of sideways trading back and forth and having the bulls and bears fight it out is not an unhealthy thing. In fact, it's a very healthy thing as we consolidate on a go forward basis. So let's keep a look at that and see how we close today and see what we set up for next week. But the bulls and bears are fighting. My next topic is the media-driven dire headline fatigue. Yes, Jones Trading, which I report quite frequently from, they have a daily report, and they specifically wrote what traders are focused on as the media pushes dire headlines. In fact, they changed their daily headline to read that. And ultimately, what they're looking at is I think we all have fatigue, right? Especially, we're almost halfway through 2020, but it kind of feels like a decade wrapped into the first 6 months, if you will. And the media is not helping that. So that's why we're sort of helping you look through the headlines and look through what really matters most. And the indicators that matter most right now, we believe the markets are paying attention to, ultimately are policy risk going forward for the next 6 months. So we're going to take a broader view here. And one of the key indicators that keeps presenting itself as a concern, especially as it relates to markets, is the present policy, fiscal policy. That's sort of think about it from the current administration and the tax policies that are in place. Well, those seemingly could be threatened in the fall because there's more and more talk of potentially right now a Democratic sweep. So the market's going to keep watching this and reacting to this as we get closer. We're about 150 days out from the presidential election for 2020. So this is going to be more of a persisting drum that is going to be weighing on the marketplace. So we're going to be paying attention to it because it's an indicator of what we're following. And another thing is, right now, another indicator that really matters is the second wave, COVID-19 wave. And ultimately, there's a lot of data points out there, but there's two states. I know the media is making this political, and they will continue to do that over the weekend. But as what Wall Street's looking at right now, there's two states like Georgia and Colorado, both politically, sort of on the different sides of the scale. And Georgia opened up and Colorado opened up at the same time. And both of them, Georgia last 2 weeks ago saw a little hot spot rising, but now that's subsided. So now they're below that R line that I think that scientists and medical professionals are watching. So it's good because they're ahead of us. Georgia is ahead of us. Colorado's ahead of us. and they're below the hospitalization critical line and the spread critical line. Now, there are other states that are just reopening, and that same science and pattern has persisted. Like as soon as you reopen, you're going to see a spike in cases. So the media is unfortunately making this political, red state, blue state, but ultimately the market's going to watch the science and those that are ahead of us, both here in the United States as well as globally. And that is speaking to good news. So let's pay attention to that. And the final indicator I keep bringing back to the forefront, as it's going to weigh on what the indicators to monitor in terms of policy and moving markets on a long-term basis that really matters, is the U.S.-China relations, right? That's constantly going to be in the forefront, and we're going to constantly watch the headlines. I would almost guarantee the headlines be negative, but we want to watch the actions, as I keep stating, of each country, so China and the United States, versus the rhetoric, the war of words. I've given you several case in points over the last few weeks where the rhetoric or the headline is extremely provocative and antagonizing and negative. But the actions and the reactions, what matters most, of what these countries do. Case in point, the China travel ban as it relates to U.S. carriers and China carriers. Both of them within a 48-hour cycle backed away from the table. And those just were threats that didn't pan out. Another thing was the China trade deal. Would China actually purchase agriculture from us as they stated they would? And that weekend had China stating, even in their country all day long, in our country all day long, the headlines read, China's backing away, China's backing away. And even the day of, they said they were going to back away and not do it. And they actually turned out that Monday, they actually purchased what they said they would do. So watch the actions, not the words, and not the rhetoric, and not the headlines. So that's it. Get some rest over this Friday weekend, and thank you for listening. And if you have a friend or family or somebody that you care about, you want to share that wants to make smart financial decisions, please share, like or subscribe, or email us their name and email address, and we'll take care of the rest. Take care. Have a great day.